Hi, I'm Chris Gelfuso, and today we're going to talk about the LLC versus S-Corp and view from a former IRS agent on what's the difference and how each will affect your business. Today we're going to cover an overview of LLC versus S-Corp in terms of taxation, benefits of each for your business. We're going to talk about self-employment taxes. We're going to talk about how to avoid taxes using LLCs and S-Corps. So the primary benefit of an LLC, it's mostly legal protection. So obviously consult your lawyer about that. But in terms of taxation, a lot of businesses start as sole proprietors. It's the easiest way to form a business or to start a business. Basically, I could just say, you know, Chris's tax preparation, and I can be in business, get a business license with your city or your county. And then as you do business, you can obviously write off expenses that are related to the business. The thing about what's different about a sole proprietor versus an LLC is a business operating as sole proprietor is not separate from themselves individually from a legal and tax perspective. But when it comes to an LLC, the benefit there is once you form an LLC, that's a separate legal entity. So if you operate your business through an LLC, then personally, you're not liable for the business in terms of your personal assets. So let's say your company, your business gets sued to the LLC, they can go after what the LLC owns, not your personal assets, which they could do as a sole proprietor. Again, this is not legal advice, so contact your attorney. In terms of taxes, so LLCs are taxed the same as a sole proprietor. So like I said, the primary benefit is a legal one. So if someone is a sole proprietor and they decide to form an LLC, they're basically what's called a single member LLC. And so that's taxed from a federal tax perspective the same way they would be taxed as a sole proprietor. It goes on their personal tax return under Schedule C. And so there's not much difference. So a lot of people I hear and I have clients ask me, oh, should I form an LLC for taxes? And so if you're a single member LLC, it's the same thing as if you were a sole proprietor in terms of federal income tax. Now, the benefit of an S Corp, and a lot of people get this confused, there's no legal business entity that's an S Corp. You don't go form an S Corp. You either form an LLC with your state's Secretary of State, or you form a corporation, which is basically a C corporation. It's taxed like a C corporation by default. That would be like a big company that's publicly traded. You think of like Target or Microsoft or Google or something like that. They are all C corporations. So you either form one of those entities, LLC or corporation, and then you file a form with the IRS. It's Form 2553, and that's how you elect to be taxed as an S corporation. So you're still an LLC or a corporation from a legal entity standpoint, but now your taxation is as an S corp, which is subchapter S of the Internal Revenue Code, the tax code. So now we're going to talk about the differences between an LLC and one that's elected to be an S corp in terms of taxation. So let's go back to the LLC example. So let's say you are a single member LLC, you're doing business as an LLC, and let's say you have $100,000 in profit at the end of the year. So your revenue minus your expenses. And that doesn't include paying yourself because an LLC, just like a sole proprietor, you don't pay yourself wages. You basically take distributions from the profit. Because, like I said, in terms of taxation, the LLC is not separate from the individual in terms of it's basically the same as being taxed individually. So the difference then, let's say the LLC had $100,000 in profit, that basically would go on the individual's personal tax return. And so not only would that 100,000 be subject to their income tax rate, it's also subject to self-employment taxes, which is Social Security and Medicare. And so right now it's 15.3%. So you'd have to pay 15.3%. It's actually a little lower because you get a deduction. It's just under 15%. So let's just say for easy math, that 100,000 profit. So now you're paying $15,000 for Social Security and Medicare, and then you pay whatever your income tax rate is depending on your other income. Let's just say it's 15%. So now you have a tax bill of $30,000 as the LLC. The primary benefit of electing to be an S Corp is that profit from the S Corp still flows through to your personal tax return and is subject to income tax, but it's not subject to self-employment tax. So in that same example, let's just say that you're an LLC who elected to be an S Corp and you have a $100,000 profit. Well, so now instead of paying the 30,000, you're paying just the 15,000, which is your income. There is a caveat. The IRS does require S Corp owners or shareholders who are working in the business to pay themselves a reasonable compensation. So this is where now, when you elect to be an S Corp, you have to pay yourself through payroll, so like a W-2. And so let's just say in this example, the same one with $100,000 in profit. So now you're required to pay yourself a reasonable compensation. Let's say that's $40,000. So let's just say you were going to hire someone to, work in your business instead of you. You're still the owner. So let's say you were going to pay them 40,000, but instead you're working the business. So you pay yourself 40,000 through wages. That's a deduction to the S Corp. So now instead of 100,000 profit, you have a $60,000 profit, which now flows through to your personal tax return. So instead of paying 15% on 100,000, you're paying the 15% on the 60,000, plus you don't have to pay that extra 15% self-employment tax because that is covered through your W-2, because as an employer you have to withhold Social Security and Medicare. The employee pays half, and then the employer. If you're a single member, you're the only owner, you're paying both, but you're only paying on $40,000 versus $100,000. And now we're going to talk about self-employment taxes in terms of how it benefits you and your business, whether you're an LLC or S Corp. So in that example that we gave of a business operating as a single member LLC, let's say they had a $100,000 profit. Basically, let's say their income tax rate was 15%. That's $15,000 in income tax. Their self-employment tax is 15.3%. Let's say 15. That's another 15,000. So their total tax bill would be $30,000. If that LLC had elected to be taxed as an S Corp and the owner paid themselves $40,000, their income would be the $40,000 from the W-2, and then the profit from the S Corp would flow through to the individual. So that's 60. So it's still $100,000. They're still paying the same income tax rate of $15,000, but the self-employment tax is where they save. They only pay on the $40,000 they paid them as a W-2 employee. So they save on the $60,000 that flows through to them as profit, which would be $9,000. So we'd have a savings of $9,000 in this situation. And a lot of people ask me, well, then how do I get that money? I only paid myself $40,000. Well, as an S Corp, you can take what's called a shareholder distribution. So you can actually distribute yourself that $60,000 because you're going to pay taxes on it anyway, income taxes, right? So it's taxed, and you can leave it in the business if you want to reinvest in the business, or you can take it as a distribution. To sum up the video, we talked about the benefits of an LLC in terms of taxation and legal protection versus the S Corp. You still get the legal protection. Obviously, talk to your attorney. But from a tax perspective, we talked about the tax savings you can have with an S Corp, an LLC elected as an S Corp versus just an LLC. And a lot of people ask me, so when's the right time to switch to have an LLC to elect to be an S Corp? So it just depends on the business, depends on the type of business you're in, the region, because again, like I said, the IRS requires the owner to pay themselves a reasonable compensation once they're an S Corp. And so, like in that example we gave of a business at $100,000 profit, let's just say in that city or that market they're in that industry, it might be reasonable to pay someone working the business 40,000, right? So that's the example. So you can kind of use that as a rule of thumb. So like once a business starts, making a profit of around 40,000, it might be smart to start looking at, does it benefit your business to elect the LLC to be an S Corp?